We will prosecute this alleged terrorist to the fullest extent of the law. He'll face charges related to murder, terrorism, arson.
April 17, 2024, 6:42 a.m., Cedar Rapids, Iowa. The loading dock door rolled up with its familiar metallic groan. Morning shift workers at Heartland Distribution Solutions arrived to find their warehouse transformed into a federal crime scene. ICE agents in tactical vests stood beside pallets of automotive parts. FBI forensic accountants hunched over laptops in the break room. The company's founder and CEO, Marcus Greenfield, 54, wasn't there to greet them. He was already in custody. What agents discovered inside this nondescript Midwest logistics company would expose one of the largest drug cartel money laundering operations in American history. The numbers defied imagination. Over 8 years, $400 million in narcotics proceeds had flowed through Heartland's books. But this wasn't a case of criminals infiltrating a legitimate business. This was something far more disturbing. Marcus Greenfield had built the entire operation from scratch, specifically to launder cartel money. The discovery that changed everything. The investigation began 14 months earlier, not in Iowa, but in El Paso, Texas. DEA agents monitoring the Sinaloa cartel's financial networks noticed an anomaly. Wire transfers kept appearing from a Cedar Rapids company nobody had heard of, Heartland Distribution Solutions. The amounts seemed reasonable. $10,000 here, $15,000 there. Payment for logistics services rendered, nothing that would trigger automatic reporting requirements. But the frequency was wrong. Special Agent Raymond Torres of the DEA's Financial Crimes Unit ran the numbers. Between January 2016 and March 2024, Heartland had received 847 wire transfers from Mexican shell companies. The transfers followed a pattern. They stayed just under reporting thresholds. They came from rotating accounts that existed for months, then vanished. They clustered around known cartel payment schedules. Torres requested Heartland's corporate filings from the Iowa Secretary of State. The company had been incorporated in March 2016. Capital investment, $2.3 million. Source of funds, Marcus Greenfield, previously a mid-level logistics manager at a legitimate freight company in Chicago. No criminal record. No obvious connections to organized crime. An ordinary American businessman pursuing the dream of entrepreneurship. Except the dream was a lie. Building the perfect front, FBI agents executed their first warrant on Heartland's financial records in May 2023. What they found was a masterpiece of calculated deception. Greenfield hadn't just created a fake business. He'd built a fully operational logistics company that actually moved freight, employed real workers, paid real taxes, and maintained genuine client relationships. The criminal operation existed inside the legitimate business like a tumor wrapped in healthy tissue. The forensic accounting revealed the architecture of the scheme. Heartland operated 2 parallel revenue streams. The legitimate stream involved actual logistics contracts with manufacturers across the Midwest. Greenfield had aggressively underbid competitors, accepting razor-thin profit margins that barely covered operational costs. This legitimate business generated approximately $8 million annually in real revenue. The illegitimate stream was far more lucrative. Cartel-controlled shell companies in Mexico would contract Heartland for phantom logistics services, transporting goods that didn't exist, warehousing products that never arrived, cross-border coordination of imaginary freight. These fake contracts came with real payments. The wire transfers would arrive. Heartland would invoice for services rendered. The money would enter the American banking system scrubbed clean, transformed from drug proceeds into legitimate business income. Greenfield then distributed the laundered funds back to cartel operatives through a network of subcontractors. He'd hire trucking companies that existed only on paper. You pay consulting fees to logistics experts who never consulted, purchase supplies from vendors who never delivered. Each payment represented cartel money flowing back into criminal hands, now carrying the imprimatur of legitimate American business transactions. The beauty of the scheme was its sustainability. Heartland paid taxes on the laundered money. Greenfield filed accurate employment records for his real workers. The company maintained proper insurance, licensing, and regulatory compliance. When auditors looked at Heartland's books, they saw a struggling logistics company operating on thin margins in a competitive market. Nothing raised flags. The human cost. But investigations like this never stop at financial crimes. As agents dug deeper into Heartland's operations, they discovered connections that chilled even seasoned investigators. The logistics company had unwittingly provided cover for something worse than money laundering. 3 of Greenfield's phantom subcontractors had been linked to human trafficking operations along the southern border. The same shell companies receiving payments for non-existent trucking services had been flagged by Border Patrol for suspected involvement in smuggling operations. Greenfield claimed ignorance when confronted. He insisted he'd simply hired contractors recommended through business networks. He had no knowledge of their criminal activities. Federal prosecutors didn't believe him. Financial records showed Greenfield had personally met with representatives from two of these subcontractors in Juarez, Mexico, in October 2019 and March 2021. The meetings occurred in the same hotels where DEA surveillance had documented cartel leadership gatherings. Greenfield's explanation strained credulity. He was discussing logistics partnerships. He had no idea who else might have been in those hotels. Pure coincidence. Agent Torres reviewed the evidence differently. In his assessment, Greenfield knew exactly who he was working for and exactly what his money laundering operation enabled. The cartel didn't trust amateurs with $400 million. They trusted partners who understood the full scope of the business. The breadth of corruption. As the investigation expanded, agents identified 17 additional individuals connected to Heartland's money laundering network. This wasn't a one-man operation. Greenfield had recruited an entire infrastructure of corrupt enablers. His chief financial officer, Andrea Morrison, 41, had designed the dual accounting systems that kept legitimate and illegitimate revenues separated in Heartland's books. She'd created the algorithmic payment schedules that kept wire transfers below reporting thresholds. She'd maintained the databases of shell company contacts and routing numbers. When agents arrested her at her suburban Des Moines home, they found encrypted hard drives containing the complete financial architecture of 8 years of criminal operations. Greenfield's operations manager, Trevor Haskell, 38, had managed the logistics of the phantom contracts. He'd created fake shipping manifests. He'd generated fraudulent warehouse receipts. He'd maintained the paper trail that made non-existent services look real to auditors and banks. His cooperation with investigators would later prove crucial to understanding the full scope of the conspiracy. But the most disturbing discovery involved Heartland's legal counsel. Robert Vance, 52, a licensed attorney in Iowa, had provided legal cover for the entire operation. He'd structured the shell company contracts to minimize legal exposure. He'd advised on jurisdictional issues. He'd helped Greenfield navigate banking regulations designed to prevent exactly this kind of money laundering. Vance had betrayed not just his client obligations, but his ethical duties as an officer of the court. The corruption extended beyond Heartland's direct employees. Agents identified 12 individuals at various financial institutions who'd facilitated the scheme. Bank employees who'd processed suspicious wire transfers without filing required reports. Compliance officers who'd ignored red flags. Branch managers who'd accepted implausible explanations for unusual transaction patterns. Each had received payments from Greenfield disguised as consulting fees or gifts. The coordinated takedown federal authorities spent 9 months building their case before moving to arrests. They needed to understand the full network. They needed documentation that would survive legal challenges. They needed cooperation from witnesses inside the organization. On April 17, 2024, they executed simultaneous raids across 4 states. 6:42 a.m., ICE and FBI agents hit Heartland's warehouse in Cedar Rapids. They seized 47 computers, 923 boxes of financial records, and 14 pallets of evidence. Greenfield was arrested at his home without incident. Morrison and Haskell were taken into custody at their residences. Vance was arrested at his law office. 7:15 a.m., federal agents raided 3 banks in Iowa and Illinois, seizing records and arresting compliance officers who'd enabled the money laundering. 8:30 a.m., DEA agents in El Paso executed warrants on 6 properties connected to the cartel's financial operations, coordinating with Mexican authorities on parallel raids across the border. The synchronized operation involved 127 federal agents across multiple agencies. The arrests came down like hammers. By noon, 17 individuals were in federal custody facing charges that would send most of them to prison for decades. The press conference, U.S. Attorney Jennifer Caldwell stood before cameras in Cedar Rapids at 2 p.m. that same day. Her statement was methodical and damning. Today's arrests represent the culmination of a 14-month investigation into one of the largest money laundering operations we've encountered in the Midwest. Marcus Greenfield and his co-conspirators didn't stumble into crime. They built a criminal enterprise from the ground up, disguising it as legitimate business. Over 8 years, they laundered approximately $400 million in proceeds from drug trafficking, human smuggling, and other cartel operations. She paused, letting the numbers sink in. This case demonstrates the sophistication of modern organized crime. The defendants understood American banking systems, regulatory frameworks, and business practices well enough to exploit them systematically. They operated in plain sight, filing taxes, employing American workers, serving real clients, all while running a massive criminal operation through the same infrastructure. Assistant U.S. Attorney Michael Brennan added details about the charges. Greenfield faced 23 counts, including money laundering, wire fraud, conspiracy to commit money laundering, and operating a continuing criminal enterprise. If convicted on all counts, he faced up to 180 years in federal prison. Morrison faced 18 counts. Vance faced 15, plus potential disbarment and separate state charges for legal ethics violations. The other 14 defendants faced varying combinations of charges related to their specific roles in the conspiracy. The aftermath and the reckoning. 18 months later, after the legal proceedings concluded, Greenfield pleaded guilty to avoid trial, accepting a 42-year federal prison sentence. At 54 years old, he would likely die behind bars. Morrison received 28 years. Vance got 31 years and permanent disbarment. Haskell, who'd cooperated extensively with prosecutors, received a reduced sentence of 12 years. The financial penalties were equally devastating. The court ordered $400 million in restitution and asset forfeiture. Federal authorities seized Greenfield's mansion in Cedar Rapids, his vacation property in Colorado, his investment accounts, and his stake in Heartland Distribution Solutions. The company itself was liquidated, its legitimate operations sold off to competitors who would honor existing contracts and retain innocent employees where possible. But beyond the individual punishments, the case triggered systemic changes. The Financial Crimes Enforcement Network issued new guidance requiring enhanced scrutiny of logistics and distribution companies. Banking regulators updated wire transfer monitoring protocols. The Iowa State Bar Association implemented new ethics training requirements focused on recognizing and reporting money laundering schemes. Yet the victory felt incomplete. Federal investigators estimate the Sinaloa cartel successfully laundered the full $400 million before Heartland's operations were disrupted. That money funded drug distribution networks across the United States. It financed violence in Mexico and along the border. It enabled human trafficking operations that destroyed countless lives. Greenfield's arrest closed one pipeline, but dozens more operate across the country at this moment, hidden behind similar facades of legitimate business. The warning that remains. 3 things made this case extraordinary and disturbing in equal measure. First, the scale. $400 million represents one of the largest money laundering operations ever uncovered in the American Midwest, far from border regions where cartel activity typically concentrates. Second, the sophistication. Greenfield didn't exploit an existing business or corrupt legitimate operations. He built the criminal infrastructure from inception, designing every aspect to facilitate money laundering while maintaining perfect cover. Third, the betrayal. Every individual charged in this case was an American citizen. They weren't cartel members or foreign criminals. They were accountants, lawyers, bankers, and business managers who chose corruption over integrity. That choice carries lessons beyond individual criminal prosecution. Money laundering doesn't happen in isolation. It requires infrastructure. It requires complicity from people embedded in legitimate institutions. It requires Americans willing to betray their communities for profit. The Heartland case demonstrated how easily that corruption can take root when incentives align and oversight fails. Federal authorities now estimate that similar schemes operate in at least 8 other states, involving industries from real estate to cryptocurrency to automotive distribution. The investigation continues. More arrests will come. But the fundamental vulnerability remains. As long as massive drug profits flow north from Mexico, criminals will find Americans willing to help launder that money. The Heartland case exposed one network. The larger war continues every day, hidden in plain sight behind ordinary businesses in ordinary American cities. The morning shift workers who showed up to Heartland's warehouse on April 17, 2024, thought they worked for a struggling logistics company trying to compete in a tough market. They had no idea their paychecks were funded partially by drug money. They had no idea their CEO had built their jobs as cover for criminal operations. They were victims too, their labor exploited, their trust betrayed, their legitimate work twisted into a shield for cartel activity. That betrayal multiplied across every level of the scheme. The banks that processed the transactions, the communities that welcomed Heartland's business, the regulatory agencies that certified the company's compliance, the tax system that processed its returns. Every institution designed to protect against exactly this kind of crime had been exploited by people who understood those systems intimately enough to corrupt them. Marcus Greenfield sits in federal prison now, appealing his sentence, maintaining that he was pressured into the scheme by cartel threats. Prosecutors dismiss these claims as desperate attempts to reduce culpability. The evidence tells a different story, a story of calculated criminal enterprise sustained over 8 years through deliberate deception and systematic corruption. A story of one man's choice to betray everything American business is supposed to represent in exchange for cartel money. The $400 million is gone, dispersed into the American economy, impossible to fully recover. The damage is done, irreversible, permanent, but the arrests send a message. Build these networks, and eventually federal agents will find you. Betray your community for cartel money, and you'll face decades in prison. Enable this corruption, and you'll lose everything. The question now is whether that message reaches the next Marcus Greenfield before he makes the same choice, before another legitimate business becomes a criminal enterprise, before another $400 million flows through another ordinary company in another ordinary American city. The investigators believe similar schemes are operational right now. The criminals believe they're smarter than Greenfield, more careful, better hidden. History will determine who's right. But one thing remains certain: the war against money laundering never